Hello, my fellow investors, and welcome back to another video. Today, guys, I would actually like to talk about a new investment that I made. And I kind of have to say that words a little bit lightly because, well, it's not necessarily an investment, at least not the conventional way that I would look at it as an investment. This is strictly, I wouldn't even say gambling, but it is very, very speculative because, well, the investment that I did or the company that I bought doesn't have the fundamentals that I like in a company, doesn't really have a lot of data to even look back at. However, I decided to pull the trigger and buy some shares because of the fact that they are a platform that I use a lot here. And yes, for all those of you who saw the thumbnail, I'm talking about Rumble. I decided to buy a few shares of Rumble because after doing the partnership program, after seeing everything that the Rumble CEOs, the board, all the great people at Rumble, everything that they're doing, I'm looking at this and I'm thinking to myself, if they continue on this path, they actually may turn out pretty well, even though right now their fundamentals aren't the way that I would like them to be. You know what? I'm willing to take a risk on a very, very small position, just 25 shares, and let's actually see where they end up. So that's essentially what I want to talk to you guys about today. I'm going to take a look at, of course, Rumble's fundamentals and then do a discounted free cash flow approach. I did this yesterday on the last Rumble stream that I did. However, I want to cover it here for both Rumble and YouTube. So that way you guys can see a little bit of perspective as to where my head's at. But of course, full disclosure, as I just said, this is not the conventional way that I like to invest. You guys have known me for a while. I like good cash flowing companies, right? Good positive cash flowing companies with positive net income, decreasing shares. Rumble isn't any of this, right? Even though I do love the platform, I do love the company, the stock on the other hand, and the fundamentals just aren't there for me right now, right? So I'm taking a big risk. I guess you could say it's only about $200, but it is still a risk. It's something that I don't normally do. However, I decided to do it, seeing that after the Rumble program, I'm seeing a lot of good things that they are planning to do and even have plans in the future to do. So I'm laying that right there right now that this is not the way I like to do it. And again, this is very, very speculative. So with that said, guys, make sure to like, subscribe, comment. It really does help here on YouTube as well as Rumble. Make sure to follow us on X. And with that said, let's get started with Rumble's stock analysis video. So here we have it, guys. Here is the buy that I did today. I did the purchase for 25 shares at $8.64 for a total of $216. Now, if you guys have seen the markets today, well, you'll know that this is a lot lower, right? This is a lot lower because markets, after PPI data coming out, markets fell and Rumble was in the crosshairs for that because Rumble did fall today 8.84% and my order executed right at market open. So it's unfortunate, but it is what it is. Again, I'm not necessarily buying these 25 shares to make a quick buck or anything like that. I'm straight up doing it because I do like the company, right? I use them. They gave us the opportunity to be a partner with them, you know, all this awesome stuff. We got featured in our own special kind of little like thing area on the Rumble page where all the 100 creators that were, you know, that were part of the partner program were featured. So we had a lot of new followers on Rumble, going from around like 240 to 425, if I'm not mistaken, right now. So yeah, they did give us the opportunities to grow, and they're doing a lot of good stuff, guys, right? For a company that is competing against companies like Twitch, companies like YouTube and Google, yeah, they're really pushing it. They really, really are. So I'm not here to make a quick buck from them. Yes, I did lose today. I think I'm down like $25. But again, this is like a buy and forget it kind of thing, similar to Bitcoin, because it is going to take them a really long time for them to actually go profitable. Now, if we take a look at this graph on the 1 year, they are down 16.70%. Year to date, though, they're up a whopping 72.16%. If you bought this thing at the beginning of the year, $4.49, and at the low point this year, it was $3.39. Now, you guys know my feeling when it comes to penny stocks. Yes, a stock under $5 is technically a penny stock. But again, as I said, very, very speculative. On the 52-week range, $3.33, to a high of $11.25. Now let's take a look at the calculator for this, shall we? Because they don't pay the dividend, which is not really surprising. But we got the ticker for RUM, market cap of 2.2 billion, PE of NA is because their earnings are in the negatives, current share price of $7.73, and they don't pay the dividend, which means all of the free cash flow is going straight into themselves. However, you guys can tell that this 5-year average free cash flow of negative 27 billion is very, very bad. And the last year's free cash flow is even worse at negative $88.5 million. Looking now into the fundamentals, guys, starting with the net income, first thing I got to tell you is that this 1 year ago value is technically the trailing 12 months. Just FYI when it comes to this, but you guys can see that this is just very, very much into the negatives, right? Going from negative 0.4 million to 1 year ago of negative 88.1 million. That is a decrease of 21,925%. So there you guys have it. I'm not going to put any grades when it comes to this because, well, they're all going to be very, very bad. So I'm just going to show you guys all the graphs and then I'm going to show you the discounted free cash flow to see what we actually get. But just FYI, it's not really surprising what we're going to see here. Looking at the free cash flow, they were actually up when it came to their free cash flow 5 years ago and even a little bit 4 years ago, going from 1.1 million 5 years ago. However, as of 1 year ago, they're massively in the negative $88.5 million. And if we take a look at this, this is down 8,145% with an average of negative $27 million. Now, if we do take a look at the cash from operations and capital expenditures, we can see that, well, it's the cash from operations that's the problem here, going massively in the negative, especially on the trailing 12 months to negative $75 million. So, you add a negative and a negative, you're going to get a further negative. So yeah, that's the reason why this is in the really negatives, as you guys could see over here. The revenue, on the other hand, it's actually increasing very, very massively, going from $3.4 million to 1 year ago of $80.5 million as an increase of 2,267.65%. And this is not really surprising, guys, because they have been getting a lot more revenue ever since. So you guys can see over here, that is a really, really nice, massive increase. Looking at their total assets and total liabilities, we can see that as of 1 year ago and the trailing 12 months today, this is very nicely in the positive. However, it is coming down. Average total assets being 152 million and liabilities of 19.42 million. This is a difference of $132.5 million. The cash flow minus the liabilities is exactly what you would expect with that kind of cash flow. Yeah, this is going massively in the negatives, as you guys could see over here. As of the 1 year, they're at negative 115.8 million. And when it comes to the average, it is negative $35.48 million. If we look at the shares outstanding, we can see that this is a massive, massive dilution, especially as of 1 year ago. However, it's a new company, right? They recently IPO'd, so this is not surprising in the slightest. And as you guys can see over here, the 5-year increasing percentage isn't a thing because, well, yeah, I had to put 0 in here for things to actually work out. But you guys can see that that is still a massive, massive dilution. However, from the previous year to the current year, it is a very small increase of 0.43%. And lastly, cash and coins, they currently hold $266 million with an average of $153.18 million. Now, looking at the discounted free cash flow, yeah, this is going to be a really, really difficult one, guys, because of the fact that, well, we don't really have much to go off of here, right? We don't really have much to go off of here. So for the projected share issuing, I'm going to say that they're going to continue to issue a whole lot of shares. Maybe not as massively as they just did recently, but I think they'll start to consistently issue. And let's say in the next 5 years that they're going to do around 1% every single year. So let's do -5. Then let's do -3, and then let's do -1 on the best assumption. Now, here's the problem, right? The revenue. Because this is all over the place. If we take a look at Seeking Alpha, they expect Rumble to grow at a massive rate in the next 2 years of almost 168.5%. That's insane. I'm bullish on the company. I like the company, but 168.5% in 2 years, like, that's a little bit crazy. So I'm going to say, guys, something along the lines of like, oh man, 20%, then maybe 30, and then maybe 40%. And as we can see over here, this lands you right at $1.91 to $3.55 adjusting for debt. And then after that, $4.73 to $8.04. Very, very interesting. Margin of safety of 5, 10, and 15. This is 402 to 764, which if you look at the current share price, I mean, even after market, this is up to $7.75. We're still right here in the middle between the median and high assumption. Now, is this a buy at this point? Well, I decided to make it a buy, right? But this is not a buy for the short term. I'm buying this for the long haul, very long haul, right? Super long haul. So we'll see how this ends up. However, I'm curious to see what in the world the calculator would show if I were to put something along the lines of what Seeking Alpha is saying. So let's go for the low assumption of 50, then let's do 100%, and then on the highest assumption, and then let's say 150, which is very, very close to what Seeking Alpha is actually saying. And with this, we get the following numbers: $4.44 to $33.54, and then after that, $9.77 to $68.03. So you guys can see that right there, that if they manage to do close to what Seeking Alpha is saying, well, adjusting for that, this would be upwards of $68. I don't know if that's going to be the case. I mean, in the next 5 years, a lot can happen in 5 years. So yeah. I think more along the lines of like this would be better if they were to just grow their revenue growth 100% up in the next 5 years, $28.38. Now, with my current position, this would put me at $493.50. So whether or not this happens, I don't necessarily know. However, I do see everything that they're doing, and I do have faith that the CEO and everybody in the Rumble team will make it out very, very nicely. So all in all, guys, that pretty much is it for this video. Again, very, very unconventional what I am doing. I do not like to do this. However, I kind of made the exception for Rumble. Not because the fact that they gave me the partnership program, not because of the fact that they did pay me for getting the Rumble partnership program, but just because of the fact that I do see everything that the CEO, Rick Rakela, I don't know if you guys will watch this. If you do, you guys see that I'm one of the few people here that does look at earnings, looks at shares outstanding. So I do keep an eye on that stuff. And now me being a shareholder, a part owner of Rumble, yeah, I am going to be taking a really hard look at this, but I do have faith that the CEO, Chris Pavlovsky, Rick Rakela, and everybody at the Rumble team will do great things for Rumble. So with that said, guys, make sure to like, subscribe, comment. It really does help here with the algorithm on YouTube as well as Rumble. Make sure to follow us on X. And one last point of news is that tomorrow, on Friday the 15th, March 15th to be exact, we are going to be streaming one more time. However, this is going to be more of a fun stream because I am going to be taking part in a Mario Kart tournament. So I know, not the investing thing. However, I kind of figured, you know what? It's Friday. I kind of just want to have fun. And, it's with people from Rumble. It'll only be an exclusive live stream to Rumble, by the way. So if you guys want to check that out, make sure to follow me there. But just FYI that tomorrow we're going to do a quick stream looking at, obviously, the week that passed when it came to the markets. And then we're going to hop into Mario Kart to end the week strong. So thank you so much for watching. Peace out, and we'll see you all next time.